Disclaimer: this video is for educational purposes only and does not constitute financial advice. Please consult a registered financial advisor before making any investment decisions. Welcome to Finance Sikho India. If you're new to investing and confused about where to start, mutual funds can be your best friend. In this video, we'll simplify mutual fund investing for beginners in India. What are mutual funds? A mutual fund is a pool of money collected from many investors to invest in stocks, bonds, or other assets. It's managed by a professional fund manager. Think of it like a shared investment basket, safe, diversified, and beginner-friendly. Why choose mutual funds? Low entry barrier. Start with just 500 rupees per month via SIP. Professionally managed diversified portfolio lowers risk, easy to invest and withdraw. Mutual funds are regulated by SEBI, so they're safe and transparent. Types of mutual fund: equity funds, high growth, higher risk. Debt funds, steady returns, lower risk. Hybrid funds, mix of both equity and debt. Index funds, track Nifty, Sensex, low cost. ELSS funds, tax saving under 80C with 3-year lock-in. How to start investing? You can invest through platforms like Zero to Coin, Grow, Paytm Money, or directly through AMC websites. Here's how. Complete KYC, choose SIP or lump sum, select the mutual fund based on goal and risk profile, track performance regularly. But don't panic. Tips for beginners: start early and stay invested. Prefer SIP over lump sum for volatility control. Don't chase returns. Focus on long-term goals. Always read the scheme documents carefully. Example portfolio. Here's a simple starter portfolio: 50% in Nifty 50 index fund, 30% in hybrid aggressive fund, 20% in ELSS for tax saving. Mutual funds are a great way to start your investment journey without stress. If this helped you, hit like, share, and subscribe to Finance Warlay for more simplified finance videos.